Wonderful good day, ladies and gentlemen. Vancouver Resource Investment Conference, and I'm honored and proud here. We have Frank Holmes here from U.S. Global. We spoke some 2.5 months ago in London already, but since then a lot of happened in the markets, and we want to talk about the markets and what's going on. Frank, thanks for taking the time. Always a pleasure.
Well, it's great that you're here, from London to here, and then we're both global travelers.
That's right. Yeah, I have no idea how I do it, but I do it. Yeah, good companies here so far. The show has shrinked a lot, but I think the quality is amazing.
Yes.
Also of the people. How do you feel it?
It's outstanding, much better quality, management, properties and assets. And I think there's lots of tire kickers here. I was talking to Bart from Kitco, the founder of Kitco, and he said that his gold and silver sales are very strong. Mm-hmm. So as the commodities fallen, previous time people capitulate, maybe are the GLD ETF, but not hard sales. Like buying gold or buying silver remained robust. That's what's really precious to see for precious metals. And here, 4,000 people signed up to be attending for the next 2 days.
Mm-hmm. That helps a lot, definitely. And we need the buyers. We need the physical buyers. That's why the production is there. And what's interesting, I listened yesterday to Brent Cook, and he said we produce like 80-90 million ounces gold per year, but replacement is only 40 million.
Right.
So where will this result?
So we're going to see a supply side contraction, but it's not going to be really fast, but it's going to happen.
Yeah.
I think the other part that's really important for your listeners is that there's TPP supposed to go through, Trans-Pacific Partnership. Mm-hmm. And this is like 2002 with the WTO, which unlocked global trade, and they're going to see 18,000 tariffs drop for 25% of the world's GDP. So we need stimulus that's fiscal, not cheap money, but fiscal stimulus to ignite global growth.
Absolutely. You're also doing a letter, I would call it, or let's say I receive your emails also. I think it's on a weekly basis. It's usglobalfunds.com,
usfunds.com or Frank Talk.
Okay, Frank Talk, that's right. You were writing about volatility, etc. Just give us a little bit of an insight what your topics are now.
There's a great piece there called Managing Expectations. Yeah. And like Warren Buffett said, that if you want to have a long-lasting marriage, have low expectations. Everything is on the upside. Okay. So I've written a piece for people to understand that different commodities and different stocks have different DNAs of volatility and how you can use them for your benefit to trade. Okay. So if they go to usfunds.com and type in Managing Expectations, it's a booklet they can download, it's electronic, and it's a great explanation of markets. But the big thing I've been trying to tell people is PMI, Purchasing Manufacturers Index. I'm not outrageously bullish yet because PMI for China is below 50. And you have to get it above 50. Europe's above 50, America's slowed down, so that's one reason for this sort of skepticism in the stock market and falling oil prices. But I think that when we look at oil prices, historically, they bottom this time of the year. There's a real seasonal pattern to oil. And when that bottoms and starts to rise, then you start seeing currencies. The Canadian dollar firms up. The Russian ruble firms up. The Colombian peso firms up. Yeah. So I think we may see that this is the sort of what do they call it, flush out year.
Fantastic, great. You said the PMI in China is below the 50. Of course, it has to be above the 50, so then it's expansion, below it's contraction.
And PMI is Purchasing Manufacturers Index. Yeah. And it is looking forward. GDP is looking out the rearview mirror. Yeah. But when you look at PMI, and it's updated every month, it's trying to guesstimate what's going to happen in 6 months. But whenever we've had the 1 month above the 3 months above the 50 for global PMI, oil rises, copper rises, iron ore rises, gold rises.
Yeah, definitely. Maybe one word to India. I read an article 2 days ago about India, and it was saying like by 2020 they want to build 20 million houses, 6 of the largest sub-counties or sub-states, however you want to call it, are working now together with the government to do infrastructure, rail track, etc., etc. Is India taking over a bit the role from China in the future? What do you think?
Well, it's an important part of that engine. And remember, China and India, Chindia, affectionately known, is 40% of the world's population. Yeah. But it's only 20% of GDP. So there's a lot more opportunity for it to capture a bigger part of the global growth. Its economy is growing faster than I would say China is, but it's growing predominantly consumption. So these are all positive aspects. And if we go back in the history books in 1840, Chindia was 40% of the world's GDP.
Wow, crazy, huh?
So if we go back to them being 40% of the world's GDP, all these commodities will be firmer.
Wow, fantastic. Yeah, let's hope that this happens, honestly. So what are the main topics for you this year, also with your funds, I would say? What topics in the world you want to play with the funds? Where do you see action? Where do you think, maybe I should stay back of it or avoid it?
Well, there's so many opportunities if you can hedge the country's currency.
Yeah.
You can't do it in Russia, but you can do it in Turkey. And you can hedge the Canadian dollar, and you can hedge the Australian dollar. So what I'm trying to share with your listeners is that in Australia, some of these gold stocks are up 700%. So the magic is, and same thing in Canada, so if you've locked in the currency hedge, you're doing well. Now, why is that important? Because gold in Canadian dollars right now is $1,600. In US dollars, it's $1,100. It's a $500 spread. So they're paying local salaries in Canadian dollars, but they're getting US dollars. Yeah. So they have a huge cushion. So they're having higher cash flow returns on capital. So in our quantitative studies, any company that has a high cash flow return on invested capital and higher gross margins, money goes to them. Quant funds go to them, that's where they go. And now you're starting to see Canadian gold companies deliver those numbers, and these stocks are appreciating.
So Canadian gold companies is a good pick.
It's a good pick. Definitely. And if you want a big blue chip, I've mentioned like Franco-Nevada, Silver Wheaton, particular Franco-Nevada, the revenue there is $15 million per worker.
Huh. Wow.
And Goldman Sachs is $1 million.
Yeah.
And if you went and bought Newmont, it's $200,000. So it's much better to go buy a royalty company, and the management are the biggest philanthropists in education and resources, and you have high gross margins, and the stock has far outperformed 90% of the gold stocks.
Yeah, great. By the way, if you talk about royalty, how do you rate Cisco? I mean, they are collecting companies, they have that much cash. I think they have like 500, 600 million in facilities and cash. How do you see that?
It's a great company, but it doesn't have the quant metrics. So to really get big institutional money coming into a Cisco, it's going to have higher margins. So the margins are going to have to the G&A so that the margins are the same as Silver Wheaton and Franco-Nevada.
Yeah.
Two, that will throw off higher cash flow returns on invested capital. Then money will flow into it and the stock will appreciate. Yeah. Like Nicoleco's done very well.
Nice dividend also?
Nice dividend, and its cash flow return on invested capital is much greater than Newmont or Barrick.
Fantastic. Great. Frank, thank you very much for that, and look forward. And we are going to see what happens this year, and hopefully finally gold starts to rise.
Yes.
Right?
From your lips to God's ears.
Would be great. Thank you very much for that.
Thank you.
Frank. Ladies and gentlemen, it was Frank Holmes from US Global. Check out his website, usglobalfunds.com. And he's doing a weekly newsletter. And honestly, it's fantastic material, sensational analysis and charts inside. And it makes it easy to understand the economics and especially also resources. And as he said, Franco-Nevada, Cisco, the Agnico Eagles of the world, they are way too cheap, and great companies generate great cash and also paying dividends. And don't forget about the currencies. The Canadian dollar is weak, the Australian dollar is weak. The companies are making money up 500, 600, 700%. So check it out. Thanks for watching us. Bye-bye from Vancouver.